Hello again from Sprott Money, sprottmoney.com. We've reached the end of November, doing a lot better than we were at the beginning of November, that's for sure. And it's time to wrap up the month. I'm your host, Craig Hemke, and joining us to see what happened in November is my old friend, Andrew Maguire. Andrew, of course, an advisor at Kinesis Money. Great expert in the precious metals, have been doing a lot longer than I have, and we're all in his debt for all of the information he's provided over the years. He's going to give you a little more today. Andy, nice to see you.
Hey, great to be with you, Craig. Brother from another mother.
That's right. We only knew who that mother was. We could get her.
It's really great to be with you, and I'm looking forward to your next trip over here. It'd probably be a golfing trip. I'm sure it will be
for sure. We're from the last time I was over there. Things are sure looking different. We got to talk about some of that stuff today. I want to remind everybody to get started. I mean, we are here at the end of November. It's about ready for the holiday season. Andy and I are recording this on Wednesday, the 26th. Friday's going to be Black Friday. Monday is going to be Cyber Monday. Give the gift that keeps on giving the whole year. Stop by sprottmoney.com. They'll soon have the holiday gift guide out. There's always great sales, great gift ideas within that gift guide. Just go to sprottmoney.com and set up your kids, your grandkids, get them stacking, get them to understand what sound money is. And a gift from Sprott Money is a great way to get started. Andy, let's do this. You know, we began this month with a rather sharp sell-off in the back half of October. Gold was about 8% from its highs, and silver was maybe 10+% from its highs. And oh, Andy, the doom and the gloom, and oh my gosh, it's all over. It was a bubble that had popped. Well, as we record this here on the 26th, spot gold's back up to about 4,200, which makes it up 5% on the month. Spot silver's back up to 53, which places it up almost 10% on the month. Just to bounce, or are we about ready to extend these rallies?
Well, I mean, you've just outlined what was the classic wash and rinse cycle. And of course, you know what it is. I mean, it really annoys me. It's part of the system, but it really annoys me when I call them a pestilent group of speculators who decide that, hey, I'll chase momentum in any way. Now, these guys control, momentum traders control pretty much 85% of all the remaining open interest. Most of the open interest from real institutional guys disappeared. I don't want anything to do with that COMEX anymore. There are plenty more physical exchanges, and we know where they are, where they get treated better. If I'm a refiner, a producer, or anything anything where I depend on a real price, why would I have anything to do with this toxic mix of prices that sort of comes together? If I'm take a position, it's visible. There's only a couple of big guys controlling the book. And of course, they're going to take you out. Of course they will. And they do it on a regular basis. So momentum traders, to answer your question, here's what happened. So they decide it finally breaks out. What do? Oh, we're going up this time. So they hang on to the coattails of what is actually a physically driven market. But they get so much bloated open interest. So what you need to do is, of course, in the meantime, the COTs, the same guys that we know that operate the LPMCL pretty much, same footprint in both markets. And what do? Go short against every single one of those guys, knowing, guess what? Let's go to just about there, margin call. Oh, let's do another one. Bang, out they go. What they've done is they've literally popped the bubble. Thank goodness, good riddance to the whole lot of them, because essentially all that did was put them into the other mode of shorting the market with the same commercials taking the long side of them. So by the time we get this equilibrium that we were just talking about, these guys are pretty much out, long or short. They've just been rinsed of their shorts. So I think what we've done is just establish the next in the series of higher physically supported steps. That's been the process. And my goodness, Craig, I mean, what, we're $2,000 up from I mean, we're like $23 higher than the beginning of the year, over $1,500 higher in gold for the beginning of the year. I mean, you only have to step back and look, take the chart chatter out of it. What a good marketplace this is.
Yeah.
And it's not being driven by these Western, um, uh, well, the Western cartel, basically. And I think they've really, to me, they've blown it. They've lost all the good clients. They've lost all the institutionals. They're now reduced to gaming a very few, declining open interest of the really any open interest that's in there is just really mostly speculative. And I think the parameters of that are so contracted, whereas before you could create a $500 waterfall. Sorry, but in this is a lot of physical buyers where you have to, who operate in physical exchanges, as you know, where you have to buy that bar if you want to sell it, as opposed to just putting 4% of skin in the game, 96% leverage position, which is just chasing a price, a dot
Right.
on the screen.
Dot
And
on the
all we
screen.
saw was this dot on the screen get squared up, and off we go to a much higher stair step.
Which is what seems to be throwing, most of the people that do look at it as a dot on the screen, throwing them off. Is this time different? Would be my next question for you. I've been writing about it all month at my Sprott Money articles. In 1980, silver went from 10 to 48 in about 4 months, and then back to 10 in 2 months. 2011, which you and I recall rather clearly, went from 18 to 48 in about 8 months, and back down into the 20s in 4 months. Well, here we are. We first hit 48 back in early October. Andy, it's 2 months, and we're still, like I said today, 53. It sure feels different.
Oh, completely different. And I think the difference is, again, pretty much what we've just discussed about gold. It's the same in silver. The real actors are gone. And I think this open interest that's in there, it's very limited as to what they can actually rinse out, because we've got physical markets being set in China.
Hmm.
We work with the liquidity providers who interact with the Shanghai International Exchange, and really looking at what they're talking about. There's very little. It's interesting because I think what really sums it up, and you and I were talking about backwardations a little while ago. While we have unprecedented backwardations, we've seen $3 backwardations in the past. They get arbitraged one thing and another, but so close to first notice of the largest delivery contract of the year. We're seeing on last Friday 60 cents, $3,000 per contract offside. Now we're still looking at 30 cents. I
Yeah.
mean, ludicrous into first notice. It through options expiry into first notice, which is actually supposed to be tomorrow, but it actually happening today because it's
Goes off the board on Wednesday and trades first notice on Friday. Yep. End of the month.
exactly. Um, so what it tells us, what it screams at us is, hey, you can't have a backwardation coming into a delivery month where it's not telegraphing to you it's mispriced, severely mispriced. And I think the reason for that, Craig, is because the LPMCL's CME relationship, where they've got a footprint in both markets, haven't
Hmm.
they? Um, the liquidity spigot is broken. It's completely broken. They don't have liquidity anymore to be able to pull this back. And what you got, like 4 billion in SLV shorts, and
Yeah.
some of that. Yeah, there's going to be some little bit legitimate hedging in there, but 4 billion in short positions. That means that if I own an SLV share, it, it isn't there necessarily. Not if everyone wants it at the same time. And so I think it's screaming. I mean, to be honest, I think these guys are turning in on themselves. And like I said today in an episode, I think they're fighting like rats in a sack now, trying to short cover these massive shortfalls because nobody is there to help you anymore. And literally, You can't print silver. You can print more money to buy more gold at a higher price, but there just isn't the silver there. It's just not there.
Yeah.
So how the hell are they going to extricate themselves from this position? That's why they're in backwardation into a delivery month. Where does that extrapolate out?
Yeah.
To me, it's $80. That's where it
Well,
extrapolates.
let's talk about that because again, if this time is different, gold consolidated below its all-time highs for 4 years, and then right at the end for about 3 months below
Hmm.
2100, broke out March of 2024, and it's doubled. Silver's kind of doing the same thing, though maybe a little bit above its all-time highs. You mentioned that backwardation, and what Andy and I are talking about is the spot price being higher than the front month future contract price. The future has been the December contract for COMEX silver. And since October the 2nd, so now for 2 full months, that spot price has been higher, and that just shouldn't occur. And if it does, it should occur for like a day, and arbitrage should close that. Andy, the fact that it hasn't and that it persists, is this the new normal? And does this relate to what you're talking about? This kind of loss of leverage and control in that New York COMEX pricing scheme.
Yeah, and I think silver is the Achilles heel of this same group of people. RPMCL are just the four banks that basically control the cartel, basically. And I think their liquidity is completely blown to smithereens.
Mm,
All the institutional guys, as we've just said, they've exited. And now you can still access as an institutional trader. I can then go in and tag the SGEI gold corridor, which is opening up big time. Can access an increasing number of vaults, gold and silver that can be traded um, with a real physical price that is much more stable than this unbelievable
right.
paper toxic mix that is thrown in. And it only serves. And I think the reason that we're seeing less volatility and the reason we won't see these kind of big sell-offs again, there's just simply not the liquidity to do so. It's gone. It's literally gone into physical markets. And if I'm a producer or a refiner or something, why would I want a price that's so volatile? I just want to know supply demand. People are owning a bar before it's put for sale. You have to own it before you can sell it, which tells me that if you put it up for sale, that's a proper price. I don't care what that price is. It's the proper price. It's
Right.
not a COMEX derived price. It's a physical price based on supply demand on the day, based on purely on that supply demand. That is how markets are supposed to trade. And we've been gaslighted, or many people have been gaslighted into believing that this huge COMEX volatility is the market. It just
Right.
amazes me.
Right. Right. And if we've all been waiting for that to change, that leverage that they apply gets stretched to a breaking point. We don't know what it is. All this talk about how much free float there is in London backing those
Hmm.
games. And you always used to describe it to me that, they just take a forklift and move silver from one side of the vault to the other. Right.
And they won't sell it. They won't sell it. They literally will not sell it. And they don't. If you remember years ago, we used to talk about, we have a big client. We go to UBS and we say, can we have X amount? They say, no, that's
Yeah.
all you can have. Hang on. No, we will pay you for it. It's just like, just give us a price. No, you can't have it. And it's like, okay. So then it tells us what the game is. The game is,
Right.
make sure if I'm a seller, I'm UBS or JP Morgan, I've got silver at this price. I don't want to sell anybody, but I've got to look like I'm making a market. So make sure that Samsung, Nokia, and all these people get their silver, because if they don't get it in time, they're going to come to the market and just buy everything that they can, and the price is going to spike higher. Their derivative positions that relate to these. The reason they're not selling is because there's derivative positions attached to these physical bars, multi-leveraged. You know all about this. You've been talking about it for years. with your clients? And it's like, well, of course, it's mispriced. So I think they can't actually. They've lost the plot. There is literally nothing they can do. They might want to do it, but there comes a point now where, and it was just really interesting. I met a guy just a short while ago who's just written a book. I think 1,000 Reasons to Buy Silver, and he's saying, "Do you know that it takes 20 tons of silver to make 1 gigabyte in photovoltaics?" Say 20 tons of silver to make 1 gigabyte, and he said thousands of gigabytes are required. He said, so there's a supply shortage, and
Wow.
now we've got another 500,000 ounces a year of stuff that doesn't include AI. I mean, where's this silver going to come from?
Right.
These guys have dug a hole for themselves. It's a multi-billion-dollar hole. There isn't the silver there to fix that hole. Um, so the market's just simply going to run off with the SGEs are going to set the price. So if you have a mispriced position and it just happens to be a little bit backwardated at the moment, what happens when it is 3, 5, 10 bucks difference and permanent? What happens to the COMEX then?
Yeah. Yeah. Um, Andy, in our remaining time, I want to shift to gold. Um,
Mm.
this has been such an interesting year in that this century, there have been 4 years where gold has had about a 25% gain. One of them was last year. In all the previous instances, you maybe eked out a slight positive gain the next year, if not, or you've gave back 10% of it. Um, this year, we've added on another 60% or whatever it is. Andy, what the devil's going on here? Are institutions kind of front running what's coming in 2026 by continuing to bid higher? Is it physical issues? Is it central bank buying? Is it a combination of all this? What are you seeing?
Yeah, absolutely. I think silver was just a little was just the more obvious version of that. But yes, because it's hard to hide the footprints. But absolutely, this is, as we know, central bank, sovereign, institutional buying. Now, all of a sudden, we've got for all the reasons you have the cockroaches running around in your treasury markets now, and I think people are looking at it and going, hey, yeah, I really have never had exposure to gold. And so institutional um,
Yep.
traders, buyers are saying, I need some exposure. So the problem is, and this is what's confusing a lot of people, problem is a lot of these guys are not mandated to hold physical, especially the US guys, not mandated to hold physical. They can buy and sell shares and they can do it on the click of a mouse. They are now, as we know, we're talking about the 40, 2020. So we're looking at a lot of people coming out and saying 20% allocation to gold. Hey, can you remember any of this
Oh my
trade? I
goodness.
mean, it was like if you wouldn't even have 1%. You
Right.
wouldn't even have a half a
You're
percent.
a lunatic to even bring it up.
Exactly. So now you've got all these institutionals. Now, the interesting thing is they can't necessarily buy physical. They're buying the ETF. Now, you and I are great. We don't believe in the last place I want to go and buy gold is an ETF. However,
Right.
they have no choice. So, but because they're buying for keeps, they're buying, they're not going to take delivery. They are going to own that position, and it's sticky. They cannot be rinsed. You cannot say, in fact, you drop a price down, they'll buy more because they're buying more every day because they're moving from zero allocation to 20 to 25% and more in some instances for obvious reasons. So therefore, people look at it and go, oh, look, there's all this open interest building in the ETFs. It's not speculative. This is sticky stuff. And obviously the physical market is all we care about, but it actually is forcing, even though there's shorting going on in the GLD and one thing and another, it's still a physical market. And it's the physical supply demand is being set outside of the LBMA ring fence.
Mhm.
Um, and so therefore, um, it's back to same as silver. If I have a bar and I have to own it before I can sell it, I need a real price. I want a real price. So I will only sell it to you. And the more you want, the more I want.
Right. So, Andy, given the pricing scheme and the structure of the silver market is the same way they structured the gold market, is silver kind of the canary in the coal mine here in terms of the leverage being finally overstretched and getting ready to snap? If the silver backwardation persists into 2026, do you think we'll start seeing that in gold too?
Yeah, because the January contract is already at par. Shouldn't be. I mean, so
Okay.
you've got backwardations in December, although the next liquid contract is March. But when
For
you look
silver.
at yeah, silver, sorry. So, but then if you look at February, January, that's already that's already in
Teetering.
technical backwardation. So
Hmm.
it is happening. It is happening already. And now we're talking about 2026. And they're not even done. I think this morning I looked, there was still, I think, 2,000 odd tons of silver warrants floating
Yeah.
around in there. And the thing is, there's a lot of people that I know and who are saying, well, yeah, we bought and we're taking delivery. We are taking delivery.
Hmm.
Why? Because it's the only source of physical that I can get to my limit, to my actual limit. I can buy that. And so if that's the only source of physical, going to be banging on that back door, out it goes. So how's how can that possibly be? And that's mispriced. It's so grossly mispriced. And furthermore, even if it was more expensive, people would still be lining up to get it because there's not enough on offer to meet all the demand. So it is a toxic mix. And as I say, that's why I think these guys are like rats fighting in a sack.
Hmm. So, Andy, as we wrap up, and like I said, here it's the end of November, we got 1 month to go. It's seasonally a very strong period for gold and silver and the mining shares. The next breakout's going to really catch a lot of people. I mean, like you said, it's been a really steady accumulation over the last couple of years of gold, moving up in 20% surges, and then these sideways consolidations, and here comes another one. We're probably sitting on the doorstep of another. I would suspect you are pretty bullish for 2026. But in my final question, what could upset the apple cart? A major economic slowdown that would ease the pressure on silver, or maybe stopping the central bank, reversing some of the central bank gold demand. What are some things that could potentially erase some of this really bullish scenarios for these metals?
Well, I think as far as gold's concerned, you've got two, for all the reasons that you've just said. What if there was a black swan event? What if things that there
Yeah.
are cockroaches running around? So if institutional buyers are in there, and I mean, forget everyone else in Asia who views it differently to the people in the West have, but need that exposure, then obviously, as far as gold's concerned, then they've still got to allocate more and more and more. The price is inelastic. It doesn't matter. They're just going to dump more dollars and get that exposure because we'll go out of risk into cash and into gold. So so that demand there is competing with Asian demand, and it's setting a physical price. So I can't see. I honestly believe $8,000 gold. People say, "Oh, how can you get?" Well, okay. Well, we figured 4,500 gold by the end of this year, and that was only at it was 2,900 or whatever it was. I
Yeah.
mean, you start breaking some of these barriers and the race starts to really accelerate. Now, as far as silver's concerned, um, how? I mean, we've already talking about a supply deficit. Now you're talking about the AI boom. So even if there's a slowdown, you have to look at the market. As overvalued as it may be, AI is going to require a lot of silver.
Hmm.
Photovoltaic. We just talked about photo Baltic supply.
Yep.
Again, we're talking about for 20 tons for each gigabyte. Everyone is producing, everyone wants green energy. Not even talking about AI at this point. So I think you've got so much demand in there into a supply shortage, which is not factored into the price. And and we've still got a gold price ratio that is so far away from God's ratio that it's, even if it was to come back down to the 30s, or I mean, there's
Oh
your
my.
prices. There's your 80 or $140. I mean, you just, because how can that ratio isn't a God ratio, it's a synthetic
It's a
ratio.
leverage ratio. Yeah.
It can only be synthetic. It has nothing to do with reality.
Yeah.
So
Yeah.
when this whole thing levels out, because physical markets will determine that price will wash back into where the crooks are, who have derivative bets that are based on bets made years ago and have been doubling down and figuring, well, it'll get better. It ain't got better. It's broken. I think
Yeah.
I think I can't see why. It's not just being optimistic here. It's just a question of how high will it go before real bullion comes to on offer to actually meet the actual demand.
Yep. And you and I and everybody listening can help impact that scenario by acquiring our own metal and taking it out of the talons of those rats that you'd call them, the bankers and everybody else that operates these exchanges. And we'll find some true price discovery, definitely trending in that direction. Andy, you do great work almost every week with your Live from the Vault podcast. Um, tell everybody where people can find those, because every Friday, it seems, you've got a great new guest and great new analysis for everybody.
Yeah, we do a market update every 2 weeks. So we really drill down into all the charts and where the footprints are and the drivers and who's behind it and one thing and another. And then we always have a guest. And you've been a guest many times too. Um, on every alternate week, we have a guest like yourself or somebody else, and really just get their opinion of everything. So, it's always useful to get multiple opinions about what's going on, so that other people, and the whole object of this, as much as you do, uh, you with your site that you do, and you represent Sprott here. He's a very, very honest and integral guy that I would always join in on a conference with him. He's truly respectable man, and his organization is. So I would, basically, you know, it is about an amalgamation of information. It's about education. It's about giving people information to make their own choices. If they don't believe in something, great, no problem. But at least you're making a decision that you
Right.
don't want to do something you would do. So we're just saying, hey, this is what we're doing. Um, hey, what do you want to do yourself?
Go to Google or just straight to YouTube, search Live from the Vault or Andrew Maguire Kinesis, something like that will get you to that site, to their site. You can subscribe so you don't miss any content. And as we wrap up here, I will urge everybody to subscribe to the Sprott Money site. Um, Andy just mentioned the old man. I just was texting with him this week. I have confirmed that everybody's favorite retiree will join me in a couple of weeks to discuss kind of a year in review 2025 and look ahead for gold, silver, and the mining shares. You're not going to want to miss it. We haven't recorded it yet, but I can already tell you, you're going to want to make sure you watch.
I
So hit
will.
that like or subscribe button on whatever channel you've been watching this video so that once we publish that sometime mid to late December, you get to see it as soon as it's put up. In the meantime, though, we'll wrap November up. It's been a fun month, and this has been a fun conversation. Andy, thanks so much for stopping by and sharing some of your valuable time with us.
Bless you, brother. Look forward to seeing you soon.
I hope we can do it again soon. And from all of us at Sprott Money, sprottmoney.com. Thanks for a great month of November, but keep an eye on this site for more information to come as we begin to finish up 2025.